Hello everyone and welcome to my new video on the Ethereum topic. I would like to update you with the details that are in the markets at the moment. Let's get into the topic, folks. Make sure to subscribe to my main YouTube channel. Check out all the other videos and details that are useful for your trading journey. Along the way with our AI bot trading, you can participate, no prior fee, only commission from the profits made. I'm going to talk about it at the end of the video, including about our one-on-one coaching. So what's happening with the Ethereum is no big deal. We are staying quite steadily at the same level of 1,860s, 80s, 90s, close to $1,900. This is a fight of survival because a lot of the people made money during these stages. They started to sell in a tiny portion and there is heavy selling pressure building aboard. Let me share with you the charts, which are the most important things at the moment. This is the current context. This is what we're dealing with. So we have a couple of things that I'd like to discuss, such as the Andean oscillator representation at the bottom of the screen. And then at the top on the charts, we have the EMAs, moving averages, 20 days, 50 days, 100 days, and 200 days. They are explained right there with the colors and their numbers. So what we're dealing with right now is 100 days moving average support that we're hoping to hold. Meanwhile, the 20 days and 50 days are trading above. So that is not a good sign. If they reject, meanwhile, the 100 days holds, this is a relation of tension, which is usually punished by the markets unless you find support on 200 days moving average, which is basically the blue line right there, just like we have found at this stage of the market. Around $1,800. That was the price at that point. We have been finding support on 200 days. This is a major thing because right now we could test that 200 days. We can easily do that. And as soon as we test our 200 days, which is going to move like this, we will need to react with a prompt support and a strong buying pressure on board. If that is going to get missed, if we're losing the 200 days, we're going to go through the line in the following way. Let me just share with you. So 200 days is going to go like that. Let's say we missed the 200 days. You will do a retest. You might do a zigzag around, but you will have to deal with the 100 days. 100 days will be a golden rejection of a bearish indication by crossing it on 200 days, coming back above, testing 100 days, finding resistance. This is putting a locker towards bearishness under a short-term domination. So if that appears, you must be very careful. I'm going to share with you details and updates on this topic. Stick with me, subscribe to the channel, and let's get into the business more and more accurately. Meanwhile, the 20 days and 50 days are discussing more of a short-term discussion of the topic. They do trade above us right now, but that is not a big deal at the end of the day. We can very easily trade above them very soon. In 2 or 3 hours, that thing can happen. So it is more important what happens with the 100 days and 200 days and what's the relation in between the two, along the way with the fact that there must be certain crossings and certain deals that needs to happen. Great. So what is going on the Andean oscillator at the bottom of the screen? Well, the Andean oscillator showcases the green line, which is the bullish presence, the red line, the bearish presence in terms of their force and power, and then the indicator line, the yellow line right there. We have the bullish presence right there, which is starting to slow down and decreasing basically like that. So overall speaking, this is how it actually looks like. And this is the current situation of the buying pressure. Since this specific top, we have decreased the buying pressure of the bulls in the markets. Literally speaking, there's basically our sort of situation here of pump, but they might not be backed up by the buying pressure. Simply the ones that have opened shorts can proceed by exiting, and when shorts are exiting, the price is pushed up. This is the relation. Now, what's happening next? Well, we see some bearish force increasing and then suddenly decreasing, but again trying to survive and going back in a game. Depends. If the bearish force crosses that little top over there, we are going to have a little fight going on at an intense level between the bulls and the bears. But until that point, things are most likely at an even level. We don't have anything urgent to be afraid about. We don't have anything more than a ranging structure that is trying to survive at these levels. So this is the current situation in the markets for the Ethereum topic, guys. Once again, for those of you that would like to become traders, whether we talk about part-time or full-time, and believe education is important because based on the way you act, you generate your results. So working on the source of your actions, which is your mind, is basically the right way to invest and go around. This is why the one-on-one coaching program is designed to be live directly with you on Zoom conversations, where I'll take you by hand and teach you how to trade, which is the only way I strongly believe as an educational program is possible. At the same time, for those of you think it is interesting to participate in our AI bot trading, no prior fee, only commission from the profits made, commission is paid by you. We trade through API trading permission, completely outsourced. Reach out to me, all the links in the description area or comments area. My email is right there. Do not contact me or reach out on any form of Telegram or so. We do not use it, we don't have it. Great. Have a good time, folks. We'll talk to you soon.